Crypto Parabellum Podcast, episode 7, I think. Episode 7. Joel's back doing crazy shit. So we're back to 3 hosts. We had a couple weeks off. Joel, welcome back to the show.
Mm-hmm.
That's all I get. Mm-hmm.
Yeah,
All right.
glad to be back.
Mm-hmm.
I had an eye hiatus situation going on.
Eye hiatus? Okay, well, fair enough. Alan, how are you, my friend?
I'm doing okay. I would call it as okay. I'm not. I don't feel good, and I think I'm also maybe on one this morning. So we'll see how this goes. I'm in Chicago, and so I don't have I probably have bad audio. I'm gonna have bad video, but the content's gonna be great.
But the content is going to be great. That's good. You know, last week was one of our most watched episodes because we teed up the merge from a macro perspective. I don't think we didn't really dive into it to do anything groundbreaking that people didn't really know, but just kind of put a bow on what was about to happen. And I think that's relevant to bring up right now because our topic today is going to be unpacking a conversation that Arthur Hayes had last week with the guys at Bankless. I forget their names, David and the other guy. I like David. The other guy's annoying. And Alan sent me a note like midweek. When was that? What was that, like Thursday? What'd you say? Like how did you get there first, Alan? Because let's talk about that because then I kind of had like a mind blown epiphany at 3 a.m. while listening to it. So set this up.
Yeah. I am a crypto podcast connoisseur. I listen to so much content. It's unbelievable. I don't listen to Bankless every single week, but every time I listen to them, it's such high quality stuff. And you can tell that they really know what they're talking about, especially when it comes to Ethereum.
Yeah.
So they had Arthur on, and I thought that was like the perfect pairing because one, you have the guys who probably outside of the core development team know more about the merge than anybody else in the two Bankless guys. And then you have Arthur, who maybe I'm remembering wrong, but my perception of Arthur in the past has been, it's always been his thing to shit on Ethereum, right? Like I remember when he listed the Ethereum perpetual swap on BitMEX, and I believe his tweet was something like, we added the Ethereum swap, perpetual swap, so you can short it to zero. And that was like, he really didn't like Ethereum. He thought it was worthless. Now he's maybe the most notable, top 10 notable merge bulls. So I was like, I have to listen to this. I listened. My exact comment to you after the podcast was something like, you go listen to Arthur Hayes on Bankless. I want to buy every single Ethereum that exists. It was like something like that. I left incredibly bullish.
Yeah. Yeah, it was quite interesting to listen to. I had to take my mother to the airport at 3 a.m. And so I had like this drive back and I was like, I'm going to throw this thing on right after you sent it to me. And I was like, oh my God. I thought it was really interesting, and we're going to set up why in a second, but it's almost like he hit both of our angles a little bit because we always talk about trader and builder. And so he talked about the building aspect, but he also talked about like the asynchrony of the trade, which is stuff that I look at. And so he kind of like merged both sides. I think like at the end of the day, you know, people have asked me, why do I do this? Or why do you like to trade or whatever it is. I mean, like in my life, I want to be 1% as successful as Arthur Hayes was, except for like, you know, the crime. But dude is literally been a really, really interesting voice in all of this. So Joel, what's your recollection of Arthur? Obviously you've been in this the longest. You were on BitMEX first. You told me about BitMEX first. Like, talk to me about the evolution of Arthur from your perspective, because obviously you're the CEO of a major crypto company. You've been on this bitch for a long time. Set us up, Arthur, a little bit, if you wouldn't mind.
Alleged crime, or did he plead guilty?
That's fair.
I don't remember. So Arthur was always like crypto's favorite villain to at least the public, and he played that role really well. As far back as I can remember, and I got on BitMEX pretty late. It was 2+ years after I started buying spot cryptos on Coinbase. Okay. And then I moved into Bittrex and was buying altcoins on Bittrex. And that was really where the bread and butter was for me. I'm a terrible trader. I'm a terrible trader because I don't enjoy it more so than anything else. I don't like to do it. And so that carried over to BitMEX, and I mostly spent time on BitMEX losing lots of Bitcoin. And I was not alone.
Same.
The average retail person was not a successful trader on BitMEX. It was really the first platform to give average crypto retail folks leverage
Yep.
with no regard for anything but leverage, on a nice little slider. It was real sweet. Went up to 100x.
Yep.
BitMEX's UI is still unprecedented in my opinion. I wish if I was a trader, I would wish for that sort of UI. I thought it was just so simple. That was
Mhm.
part of the problem with it. But all that to say, because me and the average folk went from making money on altcoins on Bittrex to losing money on leverage on BitMEX, Bittrex being the first one,
Yeah.
um, Arthur became a pretty popular villain for people. And then BitMEX itself as a brand, I think, didn't position itself super well as being, I don't think anyone ever thought BitMEX would like Mount Gox, but I don't think
Right.
people trusted BitMEX. And that's, I think, what led to the success of FTX and Bybit at the right time. I think by the time those platforms came around, people had been sort of fed up with BitMEX. And it was, they would show up to conferences in Lambos and like while people are losing money, on leverage, right? And so the overall perception wasn't great. And that's my core memory of him. Then the whole, the legal stuff happens. He kind of disappears for a while,
For
gone.
quite a while, like up, like
Like
really the better part of a year and a half, wasn't it? Like,
year and a half, 2 years, I want to say,
Yep.
like
yeah,
literally disappeared, and then came back with a subtle blog post. And when people, I know when we all read it, we were like, oh, this guy can actually write. Like he's
yeah,
super talented, super smart. No one ever doubted how
Yeah.
smart he was.
He's a good
and
writer.
and I think he started to put himself in a position of more of a thought leader and less of a scammy exchange operator. People have fallen out of love with Sam in recent months. I think everyone kind of goes through this cycle. I hope they never fall out of love with me. Well, I hope they fall in love with me first. But
that's
now
outstanding.
Arthur's become more of a, I think, trusted voice that
Isn't
people
that
that people
wild?
want to listen to, which is it's a cool comeback story. But we love a comeback story, right?
Yeah, and like my recollection of all of this as somebody who got in late, like it was October 2019 when I first got onto like BitMEX, was you get into like the shit take box, whatever it was called, the shit box, where
The
you just
troll
get,
box.
yeah, the troll box where people just talk shit all the time, and it's like the
Yeah,
the
that started on
constant
Twitter.
Yes.
meme was um you saw these crazy liquidation candles where like that's where like the Darth Maul stuff comes from, where there's like a massive rip and shorts get liquidated to a massive drop where everybody gets liquidated who was long. So literally liquidating both sides of high leverage traders. And everyone's like, there's the Arthur. Like there's Arthur coming in. He just sees how much is in the order books and they just take it because they can. But if I recall correctly, it was the insurance fund that was interesting about BitMEX, where like theoretically they were the first ones to kind of put that insurance fund in where if there was a March of 20 type drop, this was before March of 20 happened, they had an insurance fund there to help out. I don't really remember what the stated purpose was, but they were the first ones to do that, were they not?
Yeah, yeah, I don't know if they were, but they were the first one that I ever remember hearing about. But that insurance fund was more about protecting BitMEX than it was about protecting like users. But
Correct.
it was certainly pitched in a way that I think made people feel better about using it. Again, I don't remember people ever distrusting BitMEX from a security standpoint.
Mm-hmm.
People just distrusted the business the same way that we distrust casinos, but we go anyways, right? We sit at the table anyways. We don't like the shady characters at the top looking down in the cameras, but we go anyways, and we have a good time. BitMEX was just like that, except for no one had a good time, except for Arthur.
Right. Right. Arthur had a great time.
Good time. Yeah,
So anyway, yeah, long
that's a
story
good way to
short,
put it. We should.
yeah, I think that background is worth setting up because look, we
So
all
let's talk
know
about what he
Arthur.
said.
I think most people know Arthur kind of, but most people don't know his background because he's come back. He's gotten this, like you said, thought leadership. He's obviously brilliant. And look at his educational background. You're like, holy shit. And really, what was also interesting to me is he has a similar background as the 3AC guys, but clearly he was not as much of a fraud. I don't know. Like anyway,
Yeah.
so he gets on Bankless, and the Bankless guys start to go into everything with him, like what's happening with macro. How do you feel about the merge? And he had like this very interesting take, and I'm going to set it up this way first, and then I'll pivot to Alan. He said, they asked him why he was a trader and not a holder. And he's like, because I don't have that romanticism with crypto. He's like, I get in when there's good ideas. I get in when I think there's something that's going to happen, but I have areas in mind from like a valuation perspective, and I'm willing to get out when I feel those levels are hit. So I don't have that disillusionment in crypto, which is funny because you're talking to two of the most like fucking Kool-Aid drinking dudes in the space on Bankless. And he's like, yeah, no, I don't share that delusion, but I'm willing to acknowledge when there's asynchronous trades, which means you have essentially everybody piled on one side if there's another one taken, and stuff happening from a macro perspective. So Alan, you're going to do the best job of setting this up. So let's start about how we talked about macro, because he did that first, and then Ethereum, because the macro part was what had you and I both kind of like, holy shit. So would you mind setting that up?
Yes. So, I mean, his take on macro is pretty much the same. That's the consensus that everyone, I think, has right now, is that macro is really bad. There's a lot of things that are sort of playing into that, but the macro is bad. And so what he's looking for in a crypto trade is something that has the ability to either ignore macro completely or ignore bad macro the best, right? So it's like the least bad trade, if that's a decent way to put it. But I think, just to make a comment on what you guys were talking about before, Arthur got this bad rap, and this new immersion, he's positioning himself as like an intellectual where he did not in the past. His persona in the past was like over the top, aggressive, funny meme guy. And now this time it's like very serious. He still has his personality, and that personality comes out in his writing and like his tone of writing, but he's positioning himself as like, I think maybe he always should have, which is like, I actually know what I'm talking about. So with that being said, he believes that the macro is bad, pretty much the same as everybody else. Inflation's too high. The Fed might not have a good way out of that inflation, and the CPI print this morning, goes to sort of prove that the Fed continues to increase rates, and we aren't seeing even month over month inflation get better. And so I think the fair argument is that either the Fed is not being aggressive enough, and they're going to have to be a lot more aggressive to be effective, or even worse than that is the Fed can't be effective at any rate. And so his position was, I'm looking for now a crypto trade that can do its best to ignore that.
Yeah.
Then he had.
I was just going to add on top of that like essentially he set up that there's two ways out of this. One is that you increase rates so much that it absolutely slaughters everything, right? So it was like you have to continue raising rates at such an aggressive rate that the contraction in the economy would kind of bring inflation back down to par. And his thesis is they're not going to do that. They don't have the balls to do that. Or you have this, or it doesn't work, right? And the inflation is just too hard to get under control. And the main point he made on that was the thing that is driving this to screw the world is our aggressive rate hikes are having the largest effect on energy, because the world energy markets are based in the US dollar. We have the ability to raise rates. And so we raise rates and we kind of help ourselves a little bit, but everyone else is still paying for gallons of oil, for barrels of oil in US dollars. So we raise our rates, the currency gets higher, and everybody else who does not hold US dollars is kind of fucked, because now it costs more of their money to then buy, to raise more to get dollars to buy oil. And so that's kind of the trickle down effect that's happening right now, which I think matters, because it is causing oil to go through the roof and will continue to. But essentially his point was all of that will come to a head, and we're going to reach a situation where we have no good options. And his choice will be, he said that his theory is that we will choose to print and lower the strength of the dollar so we don't fuck all of our allies. But Alan, sorry, go ahead.
I actually, so like, let me take the other side of that. I think that is maybe 10, but I think that's maybe 10% of the issue. is when it comes to energy related items. I would say 9% of it is Russia-Ukraine war, and 10% of it is inflating the
Yeah.
dollar. So I would sort of disagree that the Fed or inflation is impacting energy. It's impossible for it to not impact
Right.
energy, and that's why I'm giving you the 10%. But I would say it's insignificant compared to everything else. And so Arthur's point was the government now needs to inflate their debt away.
Yeah.
Historically, that's what they've done. And an interesting point, like from a historical standpoint, none of us, I don't think, are old enough to remember the last time inflation got really out of hand, sort of in the most recent history, and that was under Reagan. And I'm not going to remember the name of Fed chair on inflation at that point. But that's what it took last time to get things under control. Like imagine that now. So, anyways, let's move off of that and go back to Arthur's point.
I think most interesting part of the entire podcast was when they asked him a question about how he denominates his portfolio. And I highly doubt that the Bankless guys, when they prepared that question, expected it to go this way. I've never heard anyone make this argument before. I'm sure it's out there. I'm sure it exists. I've just never heard it before. And I thought it was incredibly interesting. It wasn't that long ago, like 2017, the most popular thing to do was denominate your portfolio in Bitcoin. I don't know if you guys remember that or had that experience, but that's certainly the experience that I had. When you would go out and trade altcoins, you always looked at, do I have more Bitcoin now than I did before? Because Bitcoin was sort of like the best thing out there. And I think now people tend to denominate their portfolio in dollars. That switched during the bear market. But in 2017, early 2018, people cared about their Bitcoin denomination. I would say now it's dollars. Arthur Hayes says that he denominates his portfolio in hydrocarbons. And I was like, what? Like, what does that even mean? And then he went on to explain it. And honestly, you have to listen to it yourself because I will not do it any sort of justice, but I'll do my best. The way that he described it is that money is nothing other than a store of energy. So he says, if we have no energy, we have nothing. And energy is hard to store, right? Like you as an individual can't go out and buy a barrel of oil and keep it in your backyard. Now, then multiply that times any sort of serious wealth. You can't have 100 barrels of oil in your backyard. And so his take was that the dollar or any other currency is just a way to take that potential energy and convert it into something easily transferable. And he said crypto is also a version of that, right? So like the dollar is easy to transfer between two people compared to oil. Crypto is also very easy to transfer compared to oil. And so his take was that I care about how much energy I'm able to move around the universe. If I want someone to deliver me food later this afternoon, there's a world where that's energy, right? So I'm buying someone else's energy. Someone gets on the bike, rides to the Jimmy John's, brings me my sandwich. They expelled their energy. I bought their energy. When I go to work, I'm selling my energy right now to Joel. And so I just thought that was like such an interesting take that he denominates his portfolio in hydrocarbons. I don't know how you do that. Thanks. But I wonder how that works.
I don't know how you do that either. And I'll just say, since there's a small delay here, I'll just add on that I think that's all super fascinating, especially for those of us listening that are billionaires and have nothing better to do than think about hydro energy and all those, all this other. But listen, what the people want to know, Al, is ETH going to go up number or down number? Because we want to know what the impact of the merge will be. And Arthur, as you stated to begin with, is this term that I think sounds kind of gross, mergeable. I don't know, sounds weird, but he's He's a merge bull, and his primary thesis as to why he thinks ETH will go up in price is simple supply and demand.
Yes.
The emissions will be reduced by 90%. So if all else stays equal over the next couple of weeks and months, in terms of transaction throughput, um, inflows, NFTs, DeFi, all this stuff that operates on the ETH network. He's proposing that at this point in the market, that's not going to be drastically different 2 weeks from now than it is today. All those things are still going to be true for ETH in 2 weeks, in a month, in 2 months. And so if all those things are true, even and taking into consideration that ETH is down 70% from all-time highs, if you then reduce the emissions by 90%, price has to go up. That's essentially what he's arguing, and
Yes.
and he has been buying calls, so he's been betting that the price will hit a certain number by a certain time, and that price is 3,000 by year's end. And so, to be very specific, Arthur sees a 2x from the current prices over the course of the rest of the year. For ETH, that's what he's betting on. Now we should discuss if we agree, and it sounds, Alan, like you certainly left the call agreeing with him. So, Jared, I'd be curious to get your opinion before I upset everyone with mine.
Yeah, I don't. I mean, the raw supply and demand of it are very very clear, very cut and dry. And what's funny is the next point in that conversation, Joel, was prices down 70%, and so people aren't using it as much. Do you still feel that it will be as deflationary as you imagine? And what he said was, there's still all these dApps, there's still all these things being used that have been being used at the current rate, and it's still provided enough bandwidth for the thing still to operate. Obviously, gas prices are down, but even with what is currently happening, which everything's getting its ass kicked, there's still a ton of usage, and you can see that day to day. And so if all you do is take that and just proceed as we stand, you should see a decrease in supply on the market, which I agree with. However, there's two things that I want to point out. By the way, we're under 21,000 on Bitcoin. He said there's essentially two parts to it. There's the supply and demand aspect to it, but there's also the fact that if they take a protocol like this and they're able to merge without any issues, period. Without any issues, period. I can't see your. So go more middle. You're off to the side for me. Yep, that's a nice bar, isn't it?
It's just a black candle.
If you are able to roll out a massive protocol shift without any issues, like you guys both work in software, how many times do you get something right the first time?
Never.
We haven't yet.
No one does. And so to take something that has a massive TVL like this, is clearly the leader in non-Bitcoin crypto, and we get through this with no issues, that will be kind of a signal to everyone, like, hey, these fucking guys know what they're doing, and there's a supply decrease. I don't think it necessarily equates to 3,000 though, Joel. And the reason for that is what we saw today. Like, you literally, I'm looking at a fucking rug on the S&P 500 futures contract right now. We were at 4180. We're about to go under 4,000. For those of you who don't know, 200 points in the ES futures is a fuckload of money. That's billions and billions of dollars getting wiped off.
That's on
in
CPI.
the last 2 hours. Okay, so
that's on CPI.
If Ethereum, I know, but
right.
But my point is this: I think Ethereum outperforms relative to everything else, but that does not necessarily equate to $3,000 calls. Does that make sense?
Arthur's like main point was that he feels that the macro doesn't matter in this case, and that was like his main point that he was stressing was, in this case, he believes he can be, it doesn't matter if he's right or wrong about the macro, it'll be irrelevant to Ether's performance. That was a big argument for him. That is where he and I definitely disagree, because I've just seen this movie too many times. I do not think for a second, I don't even think, now I hope I'm wrong, it'll be good for my future, but I don't even think ETH will outperform crypto over the next 2 months, let alone perform well at all. So really? I don't think you will see I do not think you will see ETH meaningfully outperform Solana, Bitcoin, any of the other bullshit. It hasn't up to this point. So the merge people have known about, and it's been hyped for a while now, months up to this date that's coming up. ETH hasn't done anything special.
I
It's
I
gone
don't
up when everything
I don't
else
know
has
if
gone up.
that's
It's
true.
up 2x from the bottom. So is everything else. ETH
I
is up from the bottom just as much as Solana and everything else
I don't know the exact
that are not
percentages.
Bitcoin because Bitcoin's too big.
Yeah, I think the
Hold
right
on.
way to look at it is
Ethereum is
And
from the bottom in ETH BTC, which was in June. Ethereum has outperformed Bitcoin by 75%.
yeah
Bitcoin, yes, Bitcoin is slow. But let's
Yeah.
compare it to everything else that's more fun. Let's compare it to
I
like
think
Uniswap or
it's
something, or
outperformed.
even like I don't know.
Do
That's
Solana.
fair.
Do Solana. I think
Right,
it's outperformed.
but has it outperformed? Solana went to $25. It's at 40 right now. Like that's not crazy different, right? And like that's just one coin, right? Has it outperformed in any super significant way? In my opinion, it's been a decent trade. But what I'm getting at is that I don't think that over the next couple of months when this merge happens, sure, you may see a day where ETH has a great day because everyone's excited, and then it corrects right back down. But I don't think when we look back in 2 months, you're going to see ETH doing anything particularly special. If it is 3K, I'm willing to bet that you're seeing $30,000 Bitcoin or higher. I'm willing to bet you're seeing $60 Solana again. I'm willing to bet all
Yeah.
those things are true as well.
Real quick, Alan, before you pop in, because I know you want to, Ethereum has outperformed Solana from the bottom to this moment by 37%. So it's not crazy. It's not like it's 200%, but 37% is
It's
not
meaningful.
nothing.
Yeah, it's meaningful, and I think actually the right way.
We can definitely all find examples.
I think the meaningful part is that, well, I suppose maybe the right way to look at it is look from peak to current value, like not from the bottom, because I think different. Like you could argue that ETH is outperforming Bitcoin or Solana from the bottom because of the fact that Three Arrows was so ETH heavy and they were a forced seller. So I think like the most fair approach could be look at peak Bitcoin to current Bitcoin and look at peak Ethereum to current and like actually compare those two rather than from the bottom because like
Yeah, but people actually use Ethereum to the tune of like
yeah
because of NFTs. NFTs
for sure
saved Ethereum. Let's not get it twisted for a remote second.
uh,
Before that, it was DeFi holding it together.
yep
And there's ridiculous throughput on Ethereum. That should all help it. But what are we talking about? Crypto is way more exciting than what Arthur calls as a once in a lifetime opportunity, outperforming a couple of assets at the top of the crypto scale by 20 to 50%. That's not super exciting to me, especially when you can go outside of the top 25 and find plenty of shitcoins that are up 800% in the last few months and down 90%. I mean, you can pick and choose all you want. So if it's a once in a lifetime opportunity, I want to see ETH 2x while everything else does nothing. And then I
yeah
want to see it maintain this new base. I just don't think that's going to happen.
I don't think that's going to happen either. So like my best case scenario, or what I guess not my best case, what I think will most likely happen is that the merge rolls around. What is it? Thursday, something like that,
Allegedly.
and
It's a couple-day process, I think, of them getting set up. I think it's starting now.
so I think the first block where the merge occurs could be on Thursday. So let's just assume for a second that is the case. I think that block comes around. Everyone's like, okay, cool. Like what changed? Visibly nothing changes. Then you have a sell-off. And so like I would be looking for something like a 10% sell-off after a few hours after that block. That's where I would go in and buy a ton. And then my like perfect exit point from something like that in my mind is like 2200. I don't think 3000 is like the play. I think that was Arthur's call. And I wonder, like, how did he get to that number? There's a 90% reduction in emissions. Did he just say, well, then there's 100% upside, right? Like we're reducing the emission by 90%, therefore it should double. I don't know. There's probably a better way that he got to that number. I also think
like a reverse stock split or something like that.
Yeah, something like that. But that's my guess is that the merge happens. We have a 10% drop. That's the buying opportunity. Hold it up to 2200. Not financial advice. And then to me, that's a great trade. But also, I'm not a trader, so what the hell do I know?
Yeah. No, so real quick, just out of curiosity. So I use a chart that I've tweeted every now and again, but two things that I look at every single day is Bitcoin over the S&P and Ethereum over the S&P every day, which a lot of people don't look at. But that ratio I use as like my baseline for risk assets as a trader, and that helps kind of inform when people are putting their money in, right? Because there are no more risky assets than crypto, the highest beta there is, which is why I fucking love it. How much do you think Ethereum has outperformed Bitcoin from the highs at the end of last year to right now? And I'm saying this because I was shocked. I literally haven't looked at it like this, but since we've been talking about it, how Ethereum has outperformed.
Chart?
No, I'm not. I'm looking at ETH over SPX, and I'm looking at Bitcoin over SPX. So Ethereum has outperformed Bitcoin over that period, but by how much, if you had to guess?
Didn't you just say 78%?
No, that's from the bottom. This is from the highs to now. So like they fell and rose. It's outperformed a little bit. But what do you think it is?
I don't
What's
know.
the answer?
I don't know.
So from the top to the bottom right now, like essentially where we sit at this moment versus the S&P, Bitcoin is down 64% versus the S&P. Ethereum is down 61.5%. So we're talking about 2.5% versus the S&P is how much it's outperformed. Versus Bitcoin, still down tremendously overall. But that's how much, like 2.5%.
And you know what's outperformed ETH since ETH bottomed? ApeCoin. So maybe we should all invest in the metaverse instead of the merge. Maybe we start hashtag meta over merge and we make it a trend. Because what my point is that this shit doesn't matter. The merge is going to be a non-event from a pricing standpoint, unless it's an event for crypto as a whole. I just believe that, and I hope I'm wrong. I don't
disagree. I had a guy tag me in Twitter the other day when who the fuck was it? It was, I don't know, one of those. It was John Bollinger was saying that he was talking about what we think that ETH should be viewed as a new ticker post merge because it's a totally new asset. And someone's like, "Hey, Jared, what do you think about this?" And I said, "I think that's incredibly naive for one reason. I'm in this shit more than you two guys are now, but we're all crypto people more so than 99% of everybody else. And I barely understand what it means. Okay, people aren't going to know what the fuck happened. They're not going to know what happened. It's not going to look any different. For Alan's point, you're not going to see any functional. But for what they're trying to look,
they did it once before, Jared. It's called Ethereum Classic.
Yeah, right.
So we have ETC and ETH, and ETC is still hanging around like a drunk aunt at a birthday party, won't go home, and it's still like a top asset somehow. Like fucking Ripple, who still has hundreds of millions of dollars to spend on stupid shit. It's there's still so much money in the ecosystem. And again, I'll just continue to plant my flag in that unfortunately, as the market exists today, I think speculation. I could see the argument of calling it METH because it's like trendy. But we've had STETH for a while. Retail doesn't know any different or any better. It doesn't make ETH more valuable it doesn't. So you can change the ticker if you want, but I don't think marketing is going to help you accomplish your goal of increasing Ether's price. You know what I mean? So that's what that would be. That's marketing.
One quick thought here. I think that you are right that people won't get it, quote unquote, get it. But my argument would be that they don't have to. So emissions will drop by 90%. Okay. What that means for price, we don't know, and we're just speculating. But that is a fact. Emissions will drop by 90%. And so if like I think that just economics of it, there's 90% less Ethereum to sell. Now that will just really convert to stakers. And so like, who's to say that, stakers are going to sell less than miners? I don't know, but I would just argue against the fact that this is immaterial. It is material. What it does to the price, I don't know. What it does to the price could be short-term negative, but I don't see.
Well, the argument is that it's immaterial to the price, not immaterial to the protocol.
No, I think it's massive.
I think it's very material.
It's material. It's going to set up the entire next bull run. It's honest to God. I think it will. I think it sets up the entire next bull run because it's going to allow for massive scaling on Ethereum that would have never been possible. But all I was saying, Alan, is not that it's not material in terms of what they're doing. It fucking is. It's huge. And we will see that benefit again, probably at the next Bitcoin halving, right? When that shit, right? No doubt. But Absolutely. Right now, people are going to be like, "Oh, this halving happened." Like, is Ethereum amazing to use now? No, it's going to feel exactly the same. But to your point, I do think there's a trade in here. I do think we get a rip because, quite frankly, September always sucks. As a trader, I've been trading for 11, 12, 13 years in some capacity. September fucking sucks. Every year. Go look. Pull up a monthly chart. Look at September's. It fucking sucks. It always rallies October, November because people want money for gifts and shit in the end of the year. And then we get a cold, hard, dark winter. And that's essentially how this shit works. So absolutely, I'm looking for a trade. I love what Arthur said because I never thought about it as a unit of energy. And I think that's something that, like, it's hard to know based on US dollars because we are fucking, our Federal Reserve is actively fucking with the dollar's value relative to the rest of the world. And so you see this price go up and down, but like, what are we doing and what are the ramifications from that? And there's no like central beacon to be like, how is this value changing relative to everything else? Because everything's getting manipulated right now.
And that goes back to the 1 ETH equals 1 ETH argument, or the 1 BTC equals 1 BTC argument. And if you're in that camp, I don't think there's anything wrong with long-term investors buying ETH at $1,600. I think it's a great place to buy ETH. I have been buying ETH since 900 with pre-clearance from my chief compliance officer here at Stack. I think there's probably a short-term trade here for those of you who are so inclined. Short or long, pick your side and go for it. Either sell the news or buy the rumor. Great.
And both can be right. Both can be right on different time frames
by the end of the year. And I think the only way that that's not true is if you see $60 plus 40, probably $70, $80 plus Solana, probably over $40,000 Bitcoin, $35,000, $40,000 Bitcoin, those sorts of things. I think you can make an argument for a little mini bounce towards the end of the year for a speculative asset if we ever get inflation under control, or if there's any positive signs in the market, or if gas hits $2.99 again, or the war ends. Like, who knows?
Yeah.
And so with that, hopefully the listeners can make an informed decision.
Yeah, and I encourage everybody to go listen to that podcast. I think it was really interesting. The thing that bothers me about that podcast is you can tell that the Bankless dudes like have a very loose understanding of macro based on the questions they ask, which is annoying. But like they're ETH dudes, like whatever. Because I don't know how when Arthur Hayes is sitting there being like, I determine how effective my portfolio is doing based on fucking carbons or whatever the phrase was,
HydroCarbons,
and not ask the question, hey Arthur, when oil went negative $40 a barrel last year, how did that factor in your equation? Like, that's the logical follow-up fucking question, and they didn't even ask it. It's like, well, what do you mean? Like, how do you do that when there were guys that were like, hey, barrels, oil's negative $40. Now we went up to 130. We're around like 90 right now. How is that not the question you ask?
And let me just,
to be fair, get Arthur on and you can ask.
I'll just want to remind the listeners here, as well as someone who's, again, been around for a little bit. Arthur isn't in it for you, and he isn't in it to give you alpha. So the podcast is great. And I thought it was a wonderful listen. And I think everyone listening to this would get a lot of value out of it beyond the ETH merge. He talked about a lot of stuff. I think Arthur is a genius. I think he's brilliant. I think he's a successful entrepreneur and trader and everything. All that to say, this man is not trying to help you. He's sharing his opinions, but don't get it twisted for a second.
Yeah.
Arthur may very well take profit at $2,200 because his thesis evolves, and he does not owe you an explanation, and he will very likely not tweet, my new target is 22. He's not giving you targets and stop losses and when to enter. So you have to take what he says with a grain of salt. He is who you're trading against. And my friends, you're gonna lose to Arthur. This man is one of the GOATs to do it inside of this ecosystem. So you better come ready, because if you go, if you come at the king, you best not miss. And if you take a trade against Arthur, meaning that you go short Ether over this next couple of months, you're trading against Arthur. But you're only trading against Arthur as of a podcast that came out yesterday. And by next week, he may be flipped short and he might not tell a single soul. So just keep that in mind.
And the funny part too, Joel, is he's like, yeah, I have, $3,000 calls for, 1231. He could have bought them on that wick down to $800.
Yeah.
Okay. And even though the time has elapsed, there's not that much time decay on options. If you know anything about options, like the time decay happens at the end. So like that price volatility has been pretty much tracking, and he could have bought those at $800. So even though his calls are not in the money yet, they're way up from when he bought them, I would imagine. And so everything else from here is essentially just money on top. So
He's been pretty
So
vocally bullish on ETH since sub $1,000. So
right,
he's definitely in the money. And that's why I want to stress it. If it doesn't hit 3K and the end of the year comes and ETH is $600, that doesn't necessarily mean Arthur lost money because it didn't hit 3K. I just want to stress that.
yeah,
So don't come crazy at him like you were wrong. It's like he probably made millions of dollars. He probably made it off of you. And don't forget, he's a billionaire.
yeah, right. No, it's a good point. Do we have an Alan sighting? Did you just walk by your office? Is that
No,
no? Okay, well
Alan is MIA.
yeah, Alan has been lost. We lost some soldiers on this podcast. That's how it goes. Anything else on your radar, Joel? I know it's been a couple weeks. You guys got a ton of shit going on there. I mean, what's anything new on your side?
Nothing material, nothing to share. You know, as a business unit inside this ecosystem, we're heads down. We have a big team. We're all working to accomplish some cool stuff. Working very closely with some big names on the B2B side of our business, partners, people who are trying to give better, more regulated, risk-adjusted access to crypto portfolios at scale, in 401k plans and in retirement accounts. Again, we're building the non-trader product. So for all of you out there who either don't trade or only want to trade with a very small percentage of your portfolio while you become and remain long-term bullish on crypto, that's pretty much how I am. We're going to be definitely having some cool products for you.
Yeah, I think for most people, based on what I know about what you guys are doing, it's going to be, if you don't look at, like, I have 7 screens in my office with charts up, right? Like, if you're not like that, then something what you guys are doing is the way. This is the way. This is the way. Well, we'll cut it off here. Obviously lost it, man, along the way. I'll try to get this out, but I think it's worth mentioning. I'm going to post Arthur's last article, which is called For the War on Medium, in the notes of the podcast. And then I'll also link the Bankless podcast. Like, go take a listen. And I want to hear people's thoughts. If maybe we missed something, but the things that were interesting to me, I think we, for the most part, pointed out. Alan kind of said the same thing I did. I think maybe we have having a connection issue. He's like, no, it's not about necessarily the dollar. That's true. It is 100% about the war because you cut off Russia, but we're making it worse with what we're trying to do with inflation and curtailing it here. And that eventually reaches a head. And when does that happen? Does it happen before the end of the year? Does it happen after the year? Does it happen next year? I don't know. But the more expensive we make the U.S. dollar, it exacerbates the issue being done by the war in Ukraine. And that makes this all a fucking powder keg. To your point, Joel, got to be safe. You're trading against people that are way smarter than us. And you just can't play on leverage. Yeah, that's right. They can stay.
You can. Don't get me wrong. Listen, I play roulette like 12 hours a week. I'm not going to sit here and tell you what to do with your money and if it's a good return on investment or this, that. Do what you want. But I just want to, give people a little bit of insight so they know the game. You at least need to know the rules to the game you're playing, right? Yeah. You have to know the rules to the game you're playing. And if you understand that and then you make an educated decision that you want to try to win this time around, man, I've been making bets against people's better judgment and winning those bets for a long time. So I am all in favor of going against the grain or thinking that you're smarter or better or taking a chance or taking a risk. Go for it, my man, my woman, my girl, my dude. Go for it. But just understand.
Joel loves the counter trend pot odds trade is what it comes down to. It's just pot odds. There's enough money in there. I'll play the counter. Yeah.
Always. I really am. I mean, I fade the public, man. And right now I think the public is too bullish. I don't think you're going to see exciting price action come out of crypto until you see the macro start to get fixed up. So.
Yeah. I think you're right. Well, hey, welcome back. Good to have you back on again, Joel. Always love the issue. And what's interesting is that what people usually say to us is like, we don't none of the three of us have real aligned ideas on anything. Like, yeah, kind of. And then we're not going to be like, no, I'll just sit in the background and let you give your opinion. I'm going to be a little bitch. And that's kind of what people like about this is that it's just 3 different opinions. And we're not going to be like, no, you're right. I'll shut the fuck up. It doesn't happen.
Yeah. No.
So we need more of that in our lives. More Joel.
Yeah. More arguing.
That's right. Well, anyway, we will get out of here. I'll play us out if I can. Come on. There we go. Podcast episode 7. We got a stapler. We had a guy got lost along the way. There were casualties in this podcast. Build life. Dude, how many ounces are in that?
That's a gallon, baby.
Oh my God. All right, everybody. Take care.